Hey, what's going on, my fans worldwide? Today I'm just going to be doing a breakdown of a trade that I'd taken yesterday on EURUSD. So the aim of this channel is to just show my breakdown and my technical analysis of Forex pairs, commodities, and I'll touch upon some cryptos as well. First of all, I'm just going to start the first few videos just explaining my process of how I break down the charts, and then if I get a bit of feedback and you guys want to know how to trade, learn how to trade, looking at candlesticks, how to mark the charts, standard terminology of how to get started in terms of how to become a Forex trader, then I'll touch upon that as well. But let's just go ahead and get started. So first of all, when I look at the trade, when I look at the charts, I will start on the weekly. So as you can see, I've marked the weekly point of reaction. So you've got a level here, which is a lower high, and here as well, which is a lower low. So the aim of the game is to always trap the price between two levels. So that's what we're going to do. So we'll start on the weekly. As you can see, I've done that with these two lines here. Then we go on in the daily. So the daily is a good time frame to use to show you where the direction of price is going. So as you can see, today's candle, you've got a green bullish candle here, which indicates that price is going to be bullish. It's going up. So that's what we use a daily time frame for. So as you can see, the red zones are my daily levels. So you've got here, which is a daily level, which is a lower low, and this one can be updated. So I can either put it here as a daily level, but I'd like to just give it a bit of space, so I'd put it here for now. So that is my new daily level. Then what you want to do, as you can see, I've trapped the price again between these two levels. Then we want to go on a smaller time frame, which is a H4. This is a 4-hourly candle, so each candle here represents 4 hours. So as you can see, I've done it again. So now I'm using yellow zones to show the H4 levels. I've got a yellow zone here, which is the lower high, and I've got a yellow zone here, which is also fallen on a daily level, the dead red zone, which we previously marked. So this is a H4 level. Just to show you again, this is a daily level. This is where price has reacted from to go up. Now on a smaller time frame, which is a H4, you can see that this is also a H4 level as well. So then what you can do is you go on a smaller time frame. Remember, you want to trap the price between two levels. So again, we're trapping the price in a smaller time frame now. Then we'll move on to a H1 time frame, a 1 hour. So on this on this chart, each candle represents a 1 hour candle. So as you can see here, what I did yesterday, I put these little breakers in to show each day. So this was yesterday. The day prior, I get this Fibonacci tool, fib retracement. I get this from the lower high. I drag it down to the lower low. So as you can see here, you can do it to the candle, but I like to do it to the wick. So you've got 100% to 0. This is a good tool to use because I'll just show you. This is a good tool to use. For example, it's got 100 to 0, and if price was continue to be bearish, you can use this as a TP level 1 and a TP level 2. So if price was moving down, it would break this H4 level or even the daily level, and it would go here, and then if it reaches this point, you can use this as a TP level as well, but I'll touch upon that in my later videos when price actually moves that way. But in this case here, 100% is 0. Let's use this as resistance. So the way I like to mark my charts is always just using support and resistance and maybe one indicator. So in this situation here, we've got this level and this level here. So once we've done that, I've marked it, and as you can see here, this is yesterday's time frame. So Wednesday the 14th, Valentine's Day. As you can see, this candle here, I'll just zoom in. This is where I enter the trade. So I'm always on my laptop, my PC, I'm always looking at the chart on H1. So as you can see here, it's rejected the daily level, it's rejected the H4 level. You've got a bullish momentum. Look at this candle, massive green candle, bullish forming. And also what you can do is you can look at the indicator as well at this time. RSI is also, if you look here, RSI is also increasing. So the way RSI works is between If it's under 30, well, it's usually between 70 and 30. So as you can see here, anything over 30 indicates bullish. Anything close to 70 is now bearish. So as you can see here, it's touching 70, so which indicates that price is kind of, you know, reached its maximum potential. There could be indication that price is going to fall down. So this is a good indicator. Use the RSI. It's just a standard indicator. Bear in mind, guys, you need to follow price action. Always look at the candle. That's your primary. Indicators are secondary, whether you use RSI, stoichiometry, anything like that, MACD, etc. Do you know what I mean? But yeah, I just use that as a secondary. My main analysis is looking at candlesticks. So as you can see here, let me just drag that to the side. This is the trade that I entered. This is here. And what I did was, my TP was originally here on this H1 level. So this is a support level, this is resistance. Price always moves between support and resistance. So this is my trade that I took yesterday. However, the price didn't actually reach this level. So what I did is I closed it because price was decreasing, and I only trade London session between 8 AM and 4 PM, maybe 5. See how it is, but I just closed it. I didn't want to stay in the trade. But as you can see, even if I was still in the trade today, price would still be in profit. However, let's go and show what exactly I did. So this is a highlight candle I highlighted and entered the trade in. Then this is an analysis time frame, by the way, H1. What you want to do is you move on to the M15 time frame. This is my entry time frame. So this is where I'm looking for a candlestick or a formation where I feel as though I like the candle and it's in my direction and I want to enter the trade. So as I said earlier, let me just zoom in for you. This is where I entered the trade. So what you can do is look, this is where price was bearish, this zone here. As you can see, it's forming a lower low, lower high, lower low. Now this is where price changes. So if I was wanting to enter earlier and enter onto a better entry, I would actually enter on this candle here, but I missed this entry, you see. So this is where price actually changes from bearish to bullish on an M15 time frame. This is where you can see that it's formed a lower low. Price is now bullish. Look, it's a bullish engulfing candle. It's engulfed the previous bearish candle. So that indicates that buyers are now into the market. Also, as I said earlier, the secondary indicator you can use. You can see RSI starting to increase. It's starting to be bullish as well. This would have been a better entry, but I missed it at 11.15. So as you can see here, price increases to making now a higher. You could class it as a higher high or even a lower high in a larger time frame. Look at that. And now it's formed a higher low. So price has changed from here. Price actually changed from here. Not this level here. This is what I used, but price actually changed here. So this would have been another entry as well on an M15. This would have been even better as well. So I missed that trade. Could have entered twice actually. I entered here. So higher high, higher low, higher high. I missed this bullish candle, you see, but I entered on this one because I knew it would be slightly retracing, which it is. Just have a look here on the M5. Yeah, so higher high, higher low, and then look at this. This would have been another entry on an M5. You can break it down even further. You can even go down to M1, the 1 minute time frame. But to be honest with you, I like to just stay on. I like to just stay on M15, to be honest, because the price can play with your head on M1. See, if I was on M1 here and I entered here, what would you be thinking? You'd be thinking that, okay, price is going up. However, now it's slightly, it might be bearish. It's playing with the emotions. So that's why I like to just stay on M15, because you're going to be in and out of the market too much. I am an intraday trader. I don't like to scalp. I like to just be in and out of the market. However, my entries always remain on M15. The 15-minute time frame. So as you can see, let me just zoom in again. This is where I entered. Price increased, so got to around 4:45. Remember, I was saying my trades, I like to be finishing my day around 4 or 5 o'clock. So the price formed a bullish candle here, but it was slightly retracing. So I went to just close the trade because it was 5 o'clock. London session is finished. Sorry, volatility, liquidity is now finished for the day. So what I did was I closed the session. So when I entered this trade, as you can see, my stop loss was 9 pips. Why did I put it 9 pips? So just below this lower high here, just below this here, gives the price a bit of room to breathe. Price then went into profit. I closed the trade, 16 pips profit. 16 pips profit for the day. Not bad, not bad. So as you can see, originally my TP was here. I was hoping that it would, it would come around 70 pips, but look, it didn't. Even if I did have it at TP, so scalpers would have entered the trade yesterday, which was a Monday, and they would have still been in the trade. So as you can see, scalpers who are in the trade, they're still in profit. If I was still holding the trade, I would have been in 30 pips profit. So those, scalpers, they'll still stay in the trade, and they'd expect the week to end somewhere around here. So even if you make price goes around here, just where the point in reaction is and not point of failure, we'll touch upon that later on. You're making 70 pips from one trade, from one currency. This is all you need. You don't need to be chasing the market. This is a relaxed form of trading. You're not chasing in and out. And remember, you only need to win 4 trades out of 10. So if I stayed in the trade, I would have been in profit. But anyway, look, I closed it here, 16 pips profit for the day on one currency. So yeah, that's my analysis, guys. I just want to show you my technical analysis, how I trade. I'm pretty much using support and resistance, looking at candlesticks where there's bullish momentum. The secondary analysis would be looking at the indicator. But yeah, guys, I hope you enjoyed my analysis. This is what I'm going to be doing every day. If you like it, share it, subscribe. If you have any questions, or if you like me to do any breakdown of any pairs, let me know and I can do that as well. Thanks, guys. Appreciate it.